So I've been very optimistic over this whole period because the narrative was peak pessimistic. And there was only one hypothesis to test. Is this technology going away or not? That was the only hypothesis you had to have. And if you didn't see evidence of it going away, or use cases dying, and the other thing that backed up my theories were we saw, $60 billion of VC money go in? So there's an incredible amount of startups building new projects, building new areas, which will form the next foundation for the bull market. Now, we've never seen that much money in the space before. I mean, it's like 10x the size of the entire hedge fund market in crypto. Just went in like basically 2 years. So you have to start betting on the outcomes of that.
In Asia, there's hope that account abstraction or Ethereum smart accounts could onboard 1 billion users to Web3. Meanwhile, the United Kingdom has reminded crypto firms to tighten up their crypto ads or face robust consequences. And Voyager creditors have been stung with $5.1 million in legal fees. Here's what happened in crypto today. Hello and welcome to Money Talks. In today's video, Raoul shares with us his prediction for crypto, Bitcoin ETF, and the importance of adoption to skyrocket the crypto network. So without further ado, let's get started with the video.
When we realized that there was going to be much bigger implications to the space, because that was the first major domino that's going to start accelerating everything. But having been in this space for quite some time now, since 2012-13, I've seen this before many times. And it's where narrative suddenly gets to peak frenzy, a narrative of fear. And so it was by June that I started. I don't really trade a lot, so I just kind of, I'm an accumulator. I wait for opportunities to add. And at that point, I had realized that, okay, we're now in the phase where there's mass liquidation, mass fear, and narrative couldn't get much worse. Did it get worse in October? I'm not sure, because ETH never made a new low. So this was utter panic because it took people by surprise. By October, we were kind of used to the fact we were in our own banking crisis of sorts. But back then, it was peak fear. So what I was doing was trying to zoom out. I trying to spend as much time as possible hearing the noise and then trying to step back out of it to say, okay, if you filter out the noise, what is going on here? And it was the deleveraging of the space, but my liquidity indicators, which I think is the primary driver of, all markets, were bottoming. So I'm like, so here we are, just take the log trend of Bitcoin or the log trend of ETH. We'd come down to the log trend, which is the secular uptrend, and we're at the bottom of the liquidity cycle, which was turning up. So that to me was like a golden opportunity. And I started making noise about that, saying, that June period was really an opportunity to start, significantly adding into the space. I'd not sold anything. And that if you understood the liquidity cycle and the business cycle, which most people in crypto didn't really yet understand, that this was going to be a good opportunity. Then we play through to the FTX thing, which was, a enormous moment, probably more so for mainstream media than it was for the space itself. And so it became headline news all around the world. And again, by this stage, things like the year-on-year rate of change of M2, which was a big driver of Bitcoin, which was my secondary order liquidity indicator, had also picked up. So I'm like, okay, here we are when the narrative is completely opposite to the indicators. Now, not all indicators work all the time. Everything is a probabilistic outcome, but the probabilities were very high. So again, I kind of added into that period as well, thinking, okay, here's our kind of Mt. Gox moment. Here's the big one. It's the kind of puking, the kitchen sinking of everything, of all negative news flow. And then since that date, firstly, it gave me a lot of comfort that ETH didn't make a new low in October, right, that was telling me something major. Then we started to see, even over the FTX period, ETH starts becoming deflationary. It's like, not even in a bull market, it's becoming deflationary. That was interesting. The Solana story was very interesting to me because Solana had been, as the cheap narrative goes, it's just a VC token. But I started to dig in. I owned a small amount of Solana, but I started to dig in June to really look at the ecosystem and look at the depth of the ecosystem. And I thought, you know what? This feels like an ETH 2018 moment where it's down 97.5%. There's forced liquidations. And so that becomes interesting. So for me, it was an opportunistic year. It was hard because the narrative was so violent and you felt so under attack by everybody. Not only did people from outside the crypto space turn on everybody on crypto, but everybody within crypto turned on each other as well. And it was a real moment of ugliness. And so it was hard, emotionally hard, to try and tune out the noise. But if you're truly believe in a longer term time horizon, then these are the opportunities you wait for.
The recent spot Bitcoin Exchange Traded Fund, ETF, filings by BlackRock, BLK, Fidelity, WisdomTree, WT, VanEck, Invesco, IVZ, and others have brought optimism to the crypto market. Since BlackRock's filing on June 15th, Bitcoin has produced a return of 25%, ignoring the range-bound activity in the U.S. stock indices. Per Elon Solot, co-head of digital assets at Marex Solutions, the ETF narrative can be broken down into three parts: front-running the launch, flows post the spot ETFs go live, and validation of crypto as an asset class. Investment product flow in coming months could be a litmus test for the latter, so I'll be watching it closely, Solot tweeted. The Bitcoin futures premium reached its highest level in 18 months on July 4th. But traders are now questioning whether the derivatives metrics indicate excessive excitement or a return to the mean after a prolonged bear market. Bitcoin's price has been trading in a narrow 4.4% range since June 22nd, oscillating between $29,900 and $31,160 as measured by its daily closing prices. The lack of a clear trend might be uncomfortable to some, but that is a reflection of the opposing drivers currently in play. For instance, investor sentiment was negatively affected by the historic inversion of the Treasury yield curve in the United States, which reached its highest level on record. The closely monitored inverted spread between the 2-year and 10-year Treasury notes has reached its highest level since 1981, standing at 1.09%. The phenomenon known as yield curve inversion, when shorter-dated Treasury notes trade at higher yields than longer-dated notes, typically precedes economic recessions. On the other hand, signs of strength in the U.S. economy have reportedly driven investors to price in the possibility of further interest rate increases by the central bank to keep inflation under control. Currently, macroeconomic factors and regulatory uncertainty likely explain the suppressed optimism for BTC derivatives despite multiple ETF requests from the world's largest asset managers.
The ETF is the chink of light on the other side. Now, the ETF in itself doesn't cause a stampede. If you launched the ETF between June and October, you would have had zero uptake. But the ETF, as price is rising, becomes very powerful. Because most people in this space are momentum investors, particularly the RAAs, the pension plans and others. Most people the institutions have done the work on this space, and all they need is price because they don't want to look stupid. Everyone's investment committees beating them over the head saying, see, you were stupid thinking about this, but everybody I speak to, it's still on their plan. I mean, don't forget, BlackRock were talking about this during the last cycle. Remember they had Bitcoin on their website and he was talking about, Fink was saying, we've had more hits on our website than we've ever had in history. They've been thinking about this through, as have most of the big players. So it feels that as the darkness is on NFTs, we see the light coming for new capital into the space, and then it flows through. And again, very typically in a cycle, you start with the benchmark asset, Bitcoin, that outperforms. Then as the capital comes into the space, because each other part of the space is less liquid, you put the same amount of money in. As it spreads down, it causes an outsized reaction in other parts of the space. So what the space does need is new capital, because we've been recycling capital for a while. It's the same with economies. There's no new investment anywhere going on in the global economy right now because of, except AI, because of the economic situation. Nobody's got money. But the moment people start making money again, it flows through, and we'll see again stuff like the ETH Bitcoin outperformance begin again. Now, interesting enough, I've been digging on work on that too, and I found that's entirely correlated to the business cycle. That I've got a certain set of indicators that kind of suggests when that happens, and it's based on liquidity, so it's the same thing. So that gets interesting to me as well.
So, what's your price prediction for Bitcoin at the end of 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.